The Philippine Stock Exchange on Thursday wiped out previous gains this week as the country's economic growth in the first quarter fell below market consensus. The main index lost 1.75 points to return to the 6,500 level. Now, this morning, the PSEi opens higher by 0.5% at 65.74. For our market discussion this morning, we have with us John Carlo Lim. He is the co-founder and CEO of Dragonfly Securities. Hi, John. Good morning.
Hi, Stanley. Good morning. Thanks for having me.
It's good to have you here. Now, PSE still down about 0.7% since the start of the year, really, following some recovery from that steep slip that wiped out gains from recent rallies. First, what's your prognosis of the track of this index?
I actually sent over 2 slides, Stanley. Mm-hmm. Maybe you can display.
Yeah.
If you could display it.
Okay. We're showing the first slide now. This is about a PSEi against capital and equal weighted indices. Can you explain this for us?
Yep. So the blue line represents the S&P 500, which is a cap weighted index. The orange one is the equal weighted S&P 500. The blue-green one is the PSEi. As clearly shown here, when you blunt the effects of the Magnificent Seven, there is greater convergence between the performance of the PSEi and the US indices. As a matter of fact, if you take out the Mag 7, the 493 stocks only has a return below 5%.
Okay.
Given this, the PSEi actually performed exactly as one would expect, given the macroeconomic backdrop. So in the next chart,
all right. Let's bring the chart. This is 10-year US yields.
Yep.
Okay.
So in the next chart, the blue line represents the PSEi, while the orange line represents the US 10-year yield. So as you can see, the rally from November 2023 was catalyzed by a precipitous decline in yields as market participants discounted 6 rate cuts from the Fed, which was really unrealistic. But recently, the decline in the indices coincided with yields breaking out of the 4.30 range. So what happens next?
Okay.
So it depends on the yields. If yields decline for the right reason, meaning we get progress with disinflation, with the economy still in expansionary mode, giving the Fed cover to cut rates, the markets can find a bottom and raise higher. But if we have a situation wherein yields decline on account of deteriorating economic conditions, then markets will likely decline in kind in the short run.
All right. Jean, I'd like to talk about what you mentioned earlier about the Magnificent Seven. These are mostly tech stocks in the U.S. markets, largely because of AI and its push. Now, what do you think will happen, if this tech rally really loses steam?
Yeah, if the tech rally loses steam, again, if it happens for the right reason, let's say, for example, we get yields decline, the stocks that are most sensitive to declining yields are actually asset-heavy stocks, cyclical stocks, which is heavily represented in the PSEi. So the indices can survive the decline of tech stocks only in a situation wherein you have strong economic growth and declining yields, giving way to the broadening that we've all been waiting for.
All right. And John, going back to the U.S. 10-year yield, currently in the 4.5% area, I believe. Is it stable now? What do you think? Is it even rising, or will it? And what does that indicate in terms of sentiment towards riskier assets, both in the U.S. markets and here?
Yeah, I think right now we're in a holding pattern. The market is still sniffing out, what lies ahead. If I were to hazard a guess, I believe that long and variable lags will eventually come home to roost, dampening economic activity. Thereby, we can have lower yields. Then we can ascertain at that point in time whether economic growth is holding up. So it's really going to depend between the interplay of economic growth and yields.
Yes, because apparently when you talk about the Philippine markets, there's seemingly disinterest in investors. We're talking about illiquidity. I was wondering how a long-term or a prolonged illiquid market can sustain our own capital markets here in the Philippines, and what is the long-term effect of this? We're not seeing the kind of participation that we're used to even pre-pandemic. It has not recovered.
Yeah. Well, again, I point to the chart I showed earlier. Until we get a broadening out, I don't think that risk capital will return to the PSEi. But my point of view has always been, if we're talking about illiquidity, we really have to solve our own illiquidity issues domestically rather than just being dependent on foreign capital, hot money coming in. So, yeah. I feel that it's always a cycle. Later on, when yield starts falling, and let's say, actually my preferred outcome actually would be for the U.S. economy to actually fall into a recession. Why? When you have that situation right now, we're stuck in a muddy middle. Mm-hmm. Wherein everybody is trying to determine, is this late cycle, is this mid cycle, on account of the low unemployment rate and high inflation. Mm-hmm. But once you get a washed out in the form of a recession, then we can start talking about an early cycle playbook that plays into the hands of the PSEi components.
All right, John, when you talk about, solving our own illiquidity problems, what are the factors that you are considering in order for us to achieve this one?
Well, in my case, I actually appeared in ANC late last year, and I made my thoughts known about modifying the PERA to make it more akin to the retirement accounts in the U.S., wherein Filipino investors can take out pre-tax pesos and deposit it into their PERA accounts, thereby giving them a 20, 25 to 30% edge, depending on their marginal tax bracket. I really believe PERA is the key to finally catalyze the deepening of the capital markets. Other than that, everything that we've been doing, short selling, and whatnot,
is that even working now?
The edges. Yes, it's just trimming around the edges. You don't really solve the underlying issue of local participation, and we're always looking overseas for liquidity, and that's not really a long-term solution, especially if you compare us against our neighbors in Southeast Asia, such as Thailand and Vietnam. The real issue is for us to really incentivize local investors, because apparently there is risk capital out there. Filipinos are willing to put their capital at risk if they perceive that there's potential for return, and we see this in the crypto market.
Yeah. John, okay, back home, of course, here in the Philippines, you have several initiatives within and outside of PSE. Of course, all aim to improve or increase the number of Filipinos investing in our markets. Now, you at DragonFi also at the forefront of this. What kind of growth have you been seeing, given that this environment is still unpalatable these days? I mean, the market.
So we've been seeing growth on account of our tech innovation, but I anticipate further growth ahead. So when I spoke about the PERA, it wasn't just lip service to me. In reality, actually, we're poised to become the first brokerage in the entire Philippine Stock Exchange with a PERA administrator license. And we are investing ahead of the curve. We're not stopping in terms of trying to innovate in order to really democratize and increase participation in the market. Because I believe that having an equity culture, both from an investor standpoint and from an entrepreneurial standpoint, is really what this country needs in terms of nation development.
Lastly, John, we're still in a doldrum, if you will. For the past couple of years, actually, when you zoom out, this market has not been performing as a lot had expected. Now, what kind of portfolio mix are you recommending to investors under these challenging economic conditions?
So, as a dividend investor, I'm actually rooting for another leg down in the market, to be honest. So, in DragonFi, we manage a real money model portfolio centered on dividend growth stock. Okay. And from its start last December, our portfolio is actually up close to 20% based on invested capital. And so, dividend growth investing is really plays to the strength of the PSEi. Why? Because the PSEi is home to a lot of oligopolies and monopolies, which really takes care of the dividend safety aspect. At the same time, these oligopolies and monopolies, in reality, are growth stocks that is masquerading as cyclical stocks. Because in reality, most of these issues have really yet to scratch the surface in terms of their total addressable market. So you have dividend yields and dividend growth to look forward to. So if I were to advise investors on how to play the market, I'd say you should look to be more of a dividend investor when you're looking at the Philippine stock market. And if you're looking at foreign markets, then that's a different matter.
All right. It seems like it is a defensive play for you. When do you start getting aggressive? What indicators do you wish to see for you to do that?
Actually, this next leg lower, I am going to be very, very aggressive. Okay. The reason for that is historically, if you look at a risk environment where you have the anticipation of falling yields 12 to 18 months out with GDP growth still resilient, that's really a great backdrop for risk assets. So for me, it's all about just positioning and having that margin of safety. So if this market were to fall, I'm going to be very, very aggressive in buying stocks.
All right. On that note, Carlo Lim, co-founder and CEO of Dragonfly Securities Incorporated. Thank you so much for joining us this morning.
Thank you, Stanley.